This is episode 1131.
We're highly acquisitive at NICE. You know, if I look back over the time that I've been the CFO, I would guesstimate that we've probably done 10 or so acquisitions. So we are quite acquisitive, and we have a team that's always canvassing the market. As we looked at Cognigy, it was, again, very much focused on really delivering top-line growth over, the next year, but more so the coming years, that we see this as just a critical aspect of integrating this into our platform, and that it creates this really great experience between organizations and consumers. And when you think about how important those relationships are today and how AI is playing a part in those relationships, we just felt it's critical to get that right. And not only are we going to acquire them, we are going to invest further. You talked about R&D dollars, and so we will continue to really fuel the success that they've already been delivering on.
Every few years, it seems a buzzword promises reinvention. This time, it's more than likely AI, and most CFOs are still trying to turn buzz into bookings. Today's conversation cuts through the noise. We'll explore how a finance leader turns platform bets into measurable growth, when to widen the ROI lens beyond headcount, and why integrated customer experience, not siloed tools, changes the math. We'll talk investor skepticism, the discipline behind AI KPIs, and the moment you either seize a volatile window or watch it close. Our talk with CFO Beth Gaspich begins after this.
It's planning season again. Do you feel prepared? You're not alone. Many finance pros like you feel the pressure this time of year. But with the right tools, it really doesn't have to be so stressful. Introducing the annual planning checklist from Planful, a game changer for your 2026 financial planning process. With this checklist, you'll stay organized, reduce errors, and maintain confidence throughout the planning season, setting you and your team up for a successful year ahead. Don't let planning season get the better of you this time. Get ahead of 2026 by downloading the annual planning checklist from Planful now.
Hello, CFO Beth Gaspich is with us. Beth brings more than 30 years of finance leadership across enterprise software, SaaS, and financial services. She first served as CFO of Archive Systems, a private document management firm, before joining NICE in 2011 as CFO of Actimize, which at the time was a financial crime and compliance division. It was acquired several years earlier. She stepped in there, but in 2016, she became CFO of NICE overall, which she now oversees the company's global financial strategy inside the AI era. Beth, welcome.
Thank you, Jack. It's great to be here with you today.
Yeah, thanks for making time for us. We're going to begin where we always do, Beth. We want you to look back, and we want you to try to think hard about what were those experiences you feel really helped you advance forward. What would those have been for you?
Yeah, thank you. Well, thanks for the introduction, first of all. And, I would just start by kind of focusing on my experience here at NICE. And as you highlighted, I've been with the company for some time. I've been here for 14 years, and it's been an incredible experience and continues to be so. I think for me, as you highlighted, when I first joined the organization, there's two parts of NICE. One is customer experience, where we're selling enterprise software, and the other is financial crime and compliance. And so I stepped into actually the smaller part of the organization, financial crime and compliance, which represents about 20% of our business. And right out of the gate, I knew it was a special place because I was coming in not just simply as an accountant, but really the team here. I was part of a leadership team that looked to drive the growth in the company, drive the strategy, be part of a team that was going to drive the success. So I was very fortunate that I was both involved with a lot of the strategy and how we were driving the business, but also the day-to-day tactically and helping make decisions about how we did business with our customers and what that meant for revenue recognition and financial reporting. So it was kind of a multitude of different aspects. And I think that I had a lot of engagement with various members outside of the FCC business unit that it allowed me to start creating that partnership and really gain good relations in the business that ultimately were part of the reason that I was asked to step into the CFO role for the overall company. So I'm, very excited. I've been doing that now since towards the end of 2016 and the CFO overall of NICE as a company.
Looking way back now, like the first half of your career, we should mention Price Waterhouse was part of that resume. JP Morgan was part of that resume, and RiskMetrics Group. Now tell us something here. You invested nearly 10 years with RiskMetrics Group. Hefty investment. Would you have done things differently that first part of your career?
Not at all. When I look back on my career, first of all, it's probably important to understand a little bit of me on a personal basis. I grew up on a farm in the Midwest. I had an older sister that moved to New York. And so, for me, it was bright lights, big city. I was just enthralled with the idea of New York City and being a part of that. And so I literally kind of came here with a suitcase back in 1989 to Manhattan, and did a whole round of interviews and was really excited about stepping into my first job as a mutual fund accountant. And for the first part of my career was really just getting a footing about what it meant to be in a big city. And then from there, I think I really started to focus on, okay, what do I want to do? I want to be a CPA. I want to be an accountant. And as you highlighted, I went to work for some great firms along the way, including Price Waterhouse before it was PwC, where I feel that it really helped my foundation, great environment, great people, great training and investment in the people internally. And that really, I think, helped me to ultimately be a big stepping stone to where I am today. I followed that with stepping into an internal audit role at JP Morgan. And out of the gate, I'm proud to say within a few months, I was promoted there as a VP. And I think it was the combination of kind of bringing this, different experience, both as a mutual fund accountant as well as some Big Four experience, into how that would mold and shape me and ultimately my success. And one of the things about JP Morgan is that I would highlight it very much like Price Waterhouse or PwC today, and that they really take care of their people. They invest in building professionals and giving you opportunities. And so I think ultimately, I was given an opportunity at JP Morgan to actually spin off with this group called RiskMetrics Group. So RiskMetrics Group actually spun out of JP Morgan. It was founded by a managing director that worked at JP Morgan. And as you highlighted, I went on to spend really the next decade. So with my 30-year plus experience, I had the first 10 kind of just finding my way as a young person coming into to the city. And then the next 10 I spent with RiskMetrics, and that was an enormously exciting part of my career. Had a lot of really, I would say, kind of transformational things, but I was really there helping drive the business. And earlier I talked about how within financial crime and compliance, I was part of both a tactical aspect and a strategic, and RiskMetrics was very similar in that standpoint. So all of these combination of different opportunities that I had working in large organizations, smaller organizations, Big Four, I think they really played a role in helping me become a rounded professional.
Now, we always hear time and again that the first CFO role is always the hardest one to get, because to become a CFO, you have to be a CFO. Well, you step into a CFO role after RiskMetrics, so I would think that's a strong validation of all of what that experience advanced you forward with. What would you tell us about being a CFO of a private company versus a public?
I think that The obvious difference that stands out is the relationship probably with the investor community. That as I stepped into my role as a public company CFO, that was my first experience.
Yeah.
And for me, I guess I like to learn through example. So I just right away spent a lot of time with our investors, going out, tagging along with our head of IR to understand what questions our investors were asking, what was important to them, where did they have concerns. And, the other thing that I did was I actually went to sales boot camp, which the sellers thought was quite entertaining. I did that because I had come from a business that was more oriented towards financial crime and compliance. I knew less about customer experience. And so I said, wow, I really need to get out there and understand, what we do as a business and how we are going to continue to drive that growth and deliver on that. So I think the investor aspect is what I would note as probably the largest difference. I think even in a private role, I had the interaction with the board of directors, with our auditors, with our legal and tax advisors. So a lot of that was very comparable, but it was really, as I said, kind of bringing in, the set of stakeholders that are your investors. Even though you have investors in private companies as well, it's just a different type of interaction and expectation.
It's not uncommon for that to be the last box that an executive might check before entering the CFO office. For you, again, you were CFO of a privately held firm. You step into this new environment. Did you have to? What can you illustrate for us? You mentioned the sales. You stepped into maybe sales team meetings or what have you to better understand some of the challenges or what might be thrown at you by some of the analysts, I suppose. But can you tell us, is there something else that you did or someone else that opened doors for you to make certain you were involved in calls or meetings or what have you, so you could really, learn?
Yeah, absolutely. Well, in the role that I've had here at NICE, first of all, the CEO at the time, Barack Alam, he was the one in the seat that asked me to step in and be his partner as the CFO. And certainly, by doing so, he wanted to ensure I was successful. So he very much involved me in various meetings and again, kind of thinking about strategy. And one of the things that I would highlight that I think is different here at NICE is that I feel like we don't put boxes around people. We like people that are innovative, that bring good ideas, that help drive change and innovation. And so I've always felt that, that openness is very welcome.
But my familiarity with NICE is that it makes the software that helps big companies answer phone calls and keep track of what was said and make sure banks and businesses are following the rules, I guess. But this is where I get to ask you to tell us about NICE today. Again, this company is several decades old. It surprised me how it has very long roots. But tell us about NICE today. What is this company about? What is it?
Yeah, sure. Well, first I would say we've come a long way. We do some of the things that you've highlighted and talked about, but we do significantly more than that as well. We are an enterprise software firm, and we deliver AI and a cloud platform that was built natively in the cloud. And we've, been a enterprise software application provider for, the 30 plus years. And we have continued to transform as a company. We are traded on two different stock exchanges. We're traded here in the U.S. on NASDAQ and also on TASE. We're about $3 billion in revenue. We are a global company. We have more than 25,000 customers. We operate in more than 150 countries. And ultimately, in terms of what you started talking about earlier, in the early days, we were very much oriented towards the contact center, which was providing recording capabilities and routing of calls. But over time, we've greatly transformed. And we did that initially through a large acquisition we did really right at the time that I was stepping into the CFO seat. where ultimately that ended up in this CX1 Empower offering that we have on the customer experience side of our business. And that started with, again, the contact center of how we drive really great efficiency in the contact center through interaction with a human agent. But today, our business more and more and our growth drivers being driven really by the AI part of our cloud platform, which is fully integrated. So that AI is helping both augment the agents when a consumer does reach an agent, but also provides all of these humanless or AI capabilities of interaction that go far beyond the contact center. So we've really greatly expanded where we started into really the full end-to-end consumer and customer experience.
So looking at the economic environment today, what are the external factors that are playing the largest role in shaping your current financial strategy?
So, not surprising, AI is a big portion of what's going on in today's world. I think, with the introduction of ChatGPT sort of towards the very end of 22 and coming into 2023, not just NICE, but pretty much all enterprise software application providers are really being viewed differently today in terms of how is AI going to impact all of these software providers. And for NICE in particular, looking at where there are a lot of humans involved and where an AI capability can replace that has been a big area of focus. What I can say and makes me proud of NICE is that we have been out in the forefront of AI for many, many years. You highlighted that, we are more than a 30-year-old company, and our company is really founded in terms of our software in many ways, both in terms of analytics, but also in, the early phases of AI where it's machine-based learning. So a lot of the capabilities and even our internal experts already resided within NICE. I can say, prior to 2022, we were already winning awards for what we referred to at that time as Enlighten. And Enlighten was essentially, we had taken all of these different use cases of why consumers reach out to our customers, large enterprise, and we basically created use cases using AI capabilities that would drive to a better outcome for this relationship between an organization and a consumer. And so this, again, was all before agentic AI and LLMs came on stage. So we've been out in front of that for some time. And then as, conversational AI came into play, we have continued to drive forward very quickly on the AI front, expanding into next gen AI. And most recently, we announced an acquisition of Cognigy, which is a leader in the conversational AI space. We just very recently actually closed on that acquisition. And so we're very excited to add that to the platform. And, I think for AI generally, we are very much of the view that AI is really best delivered when it's integrated with a cloud native platform and also has access to relevant data, which is all of what we offer here at NICE.
So just in relation to those AI investments, can you tell us a little bit how the mindset might have quickly evolved as we've seen opportunities come forward related to AI? I mean, how do you evaluate your AI investments from a financial ROI perspective?
So there are AI investments, I would say, both when I think about AI that we're, offering to our customers, and there's also AI that we're using internally to drive our own efficiencies. When we look at, the AI sold to our customers, it's fairly easy to see. First it starts with our pipeline. We can see, in our CRM that we're driving a lot of opportunities that are driven by AI and in conversation with our customers. Ultimately, that transpires into measurable bookings, and we know exactly, even though we're selling a platform, exactly which pieces of the AI that are being sold as part of that platform. And ultimately, just last quarter as a company, we disclosed that our AI and self-service annual recurring revenue reached 238 million. It was growing 42% year over year. And, it's already representing 11% of our cloud revenue. So this is, really great validation that it's working, that it's growing, and that, as it continues to be a larger and larger part of our business, that is going to continue to drive the overall growth for us as a company. So it's highly measurable and really all that we do from a, external standpoint. I'd say, if you don't mind, I'll mention on the internal side as well, of course, as users of AI, we are looking to adopt AI internally as well, of course, within all of our different teams. So from that standpoint, what we've done is our IT team has kind of identified champions, meaning that they're champions in each of the different parts of our business. And they work with those teams to identify, how do you define success? You champion, tell me how you're going to show through your KPIs that the AI that you're investing in is working effectively. And that's essentially what we're doing on the internal side, is really working with all of our different business leaders to have measurable KPIs to demonstrate their success.
Has AI begun to play a role in forecasting at all?
It has. I think we are continuing to refine and get better at it. But it certainly has. When you think about forecasting, there are a lot of variables that you use consistently. It's a combination of, you come in with your kind of recurring revenue baseline as your starting point. You have a history of what your gross retention rate is. And so you have a predictable measure of what you expect in terms of churn. You also have what you're seeing in terms of backlog and how that will transpire into your future revenue. I talked about, the bookings as part of the backlog, that you can see that. For our business, there is a certain amount of seasonality that is also included. So you have, you can use AI really well for trying to forecast maybe what you can't do as well, just kind of in Excel. So yeah, it's a great place for it. We have already started to use it, and we actually like to compare it what our teams that are doing this, today manually are doing to compare. So we are using it, and we're continuing to refine it.
How is AI having an impact on your conversations with investors, and even the board?
Of course, it's the most common conversation. When you look at our space, I highlighted that in customer experience and anywhere, when you think about how software is being used and where there's a large investment in people to do manual exercises, it's a great opportunity to use AI. So absolutely. I think, every conversation we have with our investors and our board is around AI. It's the reason that also we made this great acquisition of Cognigy, in that AI is really going to continue to drive how we deliver as a company. When you think about a customer experience and in all of our own experiences, our AI we use in a couple of ways. First of all, we like to say that we provide a single pane of glass between our customers, these enterprises, and a consumer. So if you use, some of the competitors or AI specific solutions that are siloed, if you don't get where you need to, that experience is done, and it's a really bad experience. If you came in to find out an answer or get something resolved and it doesn't happen, then it doesn't leave you with a good feeling. But the fact that we have an integrated, again, cloud native platform with these AI capabilities, which are embedded and integrated, means that if you can't get what you need by going the humanless route, ultimately you will be able to connect with an agent in the contact center for the more complex issues. And when that happens, they have the history of everything that has happened prior to that. So it's not as if us as a consumer need to restart the conversation, where on a personal level can get really aggravating very quickly if you have that experience.
Just trying to understand better then your investment, your R&D investment, what that R&D investment might have looked like 10 years ago versus today. We would quickly assume that, wow, the majority of initiatives in R&D perhaps are AI driven today. Is that a true statement?
It is a true statement. Absolutely. And when I think about where we are sort of placing our bets as a company and prioritizing our spend, both inorganically and organically, it's very much focused around our AI capabilities and what that means for, again, the next sort of decade of growth for us as a company. So it's very much focused around our AI capabilities and how we can continue to drive capture of market share as we know the consumer experience space will continue to revolve.
As a finance leader, have you had to adjust your ROI mindset in relation to these AI-driven initiatives? Is there something unique about these types of initiatives that you might need to give them a wider berth, or you might have to look at them a little differently or classify them differently?
Absolutely, because there is really no common, I would say, KPI that everyone has acknowledged. Oh, this is how you're going to determine that, it's effective. I think everyone wants to believe that you go directly towards, well, were you able to reduce headcount? And that's certainly not always the best outcome, right? In some cases, it's really about redirecting where those people or employees are spending time and having them focus on the more strategic, the more complex activities, and taking the things that are not good time users, that are things that are more manual and administrative in nature, and having that being used by the AI capabilities in-house. So it definitely, as a CFO, is not your traditional, necessarily show me the ROI case and let's do this. There does have to be more trial and error involved to really see that, those AI capabilities are delivering the outcomes that you expect.
Have you seen, are there challenges related to scaling AI globally across the global operations here? Are there, compliance heavy markets might pose different challenges than other markets? I don't know, but as you scale globally, some of these AI initiatives, are they going to be as welcome or effective in markets globally?
So first, it's, I always consider, and when I think about AI, both externally, because we're selling AI offerings to our customers, and then internally what it means. I'd start by saying that the fact that we have been heavily embedded with AI for many, many years means it's more natural to us, that our teams internally have a greater appreciation and understanding of both analytics and then AI and then sort of the next generation of AI. So I think it starts with that, and that, our organization has always understood the importance of having guardrails, having data privacy, of being aware of the fact that AI can create hallucinations. And I think there's a very strong awareness, and I think most of those topics are actually global in nature. You'll find unique differences in certain countries that have different layers of, I would say, regulation and compliance that you have to be aware of. I think there's data privacy regulations in the state of California that are different. The EU is coming out with a new data act. So we always have those top of mind as well. But it starts out, as I said, with the core that we just have a good foundation and appreciation of how, AI and data in particular must really be addressed in terms of privacy, in terms of the use of AI as a core.
The acquisition that you just mentioned, AI-driven acquisition, it sounded as though you were positioning it that way. Just curious as to the role, and you've been involved in many different acquisitions over time. most likely. Just curious as to how this one might have been different in terms of the finance voice at the table, because there were probably enthusiasts and champions from all different camps, the customer experience camp, the technology trust, knowledge trust within the company, your CEO and other leaders. What is the voice finance puts forward? I mean, let's make certain this is going to be what is the voice that you added at the table?
So I think it's important to give a little context about the acquisitions we have done. We're highly acquisitive at NICE. If I look back over the time that I've been the CFO, I would guesstimate that we've probably done 10 or so acquisitions. So we are quite acquisitive, and we have a team that's always canvassing the market. Generally what we're looking for in acquisitions are tuck-ins, meaning that they kind of are synergistic to our business. They fit in naturally. And of the more recent acquisitions, a lot of them were synergistic in terms of the cost side, that the technology fit very well in terms of our offering. Maybe it was an area where we didn't have a large gap in the portfolio, but even something small that we thought, hey, this fits nicely. We see it as strategic. And on top of that, we're able to drive those expense, synergies, and often right out of the gate. So I think, again, historically looking back, that has been the focus in some of the acquisitions. The acquisition of Cognigy couldn't be any different than that, really. It's night and day. And that as we looked at Cognigy, it was, again, very much focused on really delivering top-line growth over, the next year, but more so the coming years, that we see this as just a critical aspect of integrating this into our platform, and that it creates this really great experience between organizations and consumers. And when you think about how important those relationships are today and how AI is playing a part in those relationships, we just felt it's critical to get that right. And not only are we going to acquire them, we are going to invest further. You talked about R&D dollars, and so we will continue to really fuel the success that they've already been delivering on.
So as a finance leader, is really the growth proposition that you identified or helped identify that made you a champion for this deal as well?
Yeah, absolutely. I think, AI in particular has been, rapidly evolving, and we expect it to continue to do so. And so we wanted to, and we did identify a leader in the space, and one that has demonstrated success. And I think the other important differentiation and distinction here is large enterprise. Because we have been around for so many years, our software is really fit and suitable for any size customer, but it can scale to the very high end and very, very large customers. And so Cognigy, that we acquired, they also have a track record where they have been delivering to very large, enterprise with marquee names. And so it's really the aspect that when you're delivering enterprise software, you must be able to scale to large enterprise, where you kind of top out in terms of what your growth potential is. So, both from the combination of AI, the capabilities that bring, but also that scalability that we do in real time, by the way, was really critical.
So for the analyst community out there, which we know is very skeptical sometimes, or AI washing, they like to call it, how do you push back on these folks to say, no, this is not that. This is really a value proposition that we're advancing?
Yeah, I think the number one way of pushing back is first to say, we have made a very large step in terms of this acquisition, right? It is something that it is a big step forward for us, both monetarily, right? That we feel very, very strongly that this is going to be our growth driver. I highlighted sort of the growth we are already seeing in our AI business, and this is complementary to that. So not only will we have our continued growth of our own AI assets that we already have today, but on top of that, we're going to have the AI from this acquisition driving our growth as well. in terms of, the evolution of, how AI impacts enterprise software, I think, I strongly feel, and more collectively, we strongly feel, I think that at the end of the day, when you think about very large organizations that need the software, it cannot happen in silos effectively. I gave you the example earlier about, if you as a consumer can't get to a resolution and you're trying something simplistic or a base offering of an AI capability, it's a very frustrating experience. And so really, when you're thinking about the growth opportunity for years to come and the way that you'll, interoperate with very large organizations and the importance that brand has for them, you really need that full end-to-end experience that seams everything together.
Well, thank you for that. I asked you a few extra questions there regarding the AI realm, but we are up to our finance strategic moment question. And this is when we ask you to look back and just share one moment of insight that you've experienced along the way during your career. May have been 20 years ago, may have been last week. We don't know. But what comes to mind when we ask for a finance strategic moment?
So, New York Stock Exchange, I rang the bell, 2008 with RiskMetrics. We talked about me spending 10 years of my life, a decade of my 30 plus years career. I was really happy and excited to be part of a team that started off as 25 people, that ended up on the floor of the stock exchange, ringing the bell in a time where the macro and the markets were just off the wall. It was really down to the wire. We kept going back and forth because of the volatility that was in the market generally, unrelated to our company at the time. And so ultimately we said, if it's now or never, and we did it, and it was very successful. RiskMetrics actually went on to be sold to another organization, did not stay public long. Interestingly enough, a lot of the folks that I spent those years with, back in the 90s still work there today, and they're highly successful. So it just shows you the strength of the talent that we were working with even at that time.
Up to our mentoring round, where frankly, we're going to ask you to look back again. When you stepped into that CFO role way back when, the first role at Archive Systems, there must have been something you didn't expect. Again, you had been through a lot at RiskMetrics. You had so much experience behind you, including an IPO, an S1. You stepped into that first 90 days as a CFO, the finance leader. What is that piece of advice, if you could go back in time and just tell yourself this? What is it that you would tell yourself? Not something you know today, but think about who you were back then as you were in the C-suite. What is it that, you would tell yourself?
I have to admit that I frankly don't think I would tell myself anything different than probably what I knew at the time. I think I've always been an adventurous person, meaning that I always like to ask a lot of questions and listen. And I think I would still go back and give myself the same advice. You talk to the team around you, both the executives and the folks that are just, at their desk in the hallway, and learn about the company, the good, the bad. Try to uncover stones, both for opportunities, but also risk, and to really dive in to learn about the organization. And I think that's, again, I do think I had, fortunately, a lot of probably good advice and mentors along the way that gave me that advice that, make sure you ask a lot of questions and listen. And from there, you put together your plan of how you can help the organization, both kind of from an operational standpoint, but also a more strategic standpoint as well.
Mentors from very early on, Pricewaterhouse on forward, or was there a particular chapter in your career where you really felt you got special mentorship?
So I would say that, during my experience with RiskMetrics, we had a CEO that was very inspirational. And I think from the standpoint of always invested in people, was very much always available to help guide people along their career journeys. And during my time there, I kind of started off as a more junior person, and through the years, I also started a family and had kids, and yet I still was encouraged to continue to come back and drive to add value and take on more. And so I also appreciated that, as a woman, I was given more opportunities to really deliver on my team and everything that we were doing in the finance organization.
How big an organization was that when it got spun out? Because I'm thinking you were in Price Waterhouse, you were in these large organizations. Yeah. And this was an opportunity to really have a relationship with the CEO, understand how the leadership thinks. It exposes you to more. Yeah.
Yeah. So RiskMetrics, I highlighted, started off as, a spin out or spinoff of JP Morgan and Reuters. And so I was one of the first 25 employees, and I, still keep in touch with, several of them today. That I think given that we all went through and the growth of this company, it created sort of almost like a family type environment. And that was fostered, by Ethan, our CEO. And so that really led to this great experience. And, I think that the skills that you learn, whether they're in a large organization, and I mentioned that created a very nice foundation for me within Price Waterhouse and JP Morgan. I think they helped me to drive what I had learned and be able to deploy them in this smaller environment as we grew over time.
Nice. Thank you for that. We always like to ask our guests to reflect a little on the personal side with us. Something from your past, something, an interest that you have, something your colleagues might not know about you, and you've been there a while, so they know a lot. But what do most people not know about Beth?
I tend to be a little bit of an open book. I would say I'm pretty transparent, and as you said, I've been here for quite some time.
Okay, what would your kids tell us about you? We'll get right to that.
Oh, what would my kids tell about me? My kids would probably say they're proud of me. I think that I have raised my children, a lot on my own. And so my kids have always seen that I've, been highly dedicated at work, but also dedicated to them as a mom. I have 2 great daughters that are doing extremely well in their own careers, and I'm very proud of them. So I think they would say it's both bi-directional, and that we both share that feeling towards each other.
So we are up to our final question. We're going to ask you to look forward for us, and what we want to know are your priorities for the coming 12 months as a CFO. What would those be?
So the number one priority, I would say, is continue to provide instrumentation and transparency into financial data. I think that's always one of the key things that both myself and my team are doing, is making sure that we have adequate access to all of the indicators of the overall business, and in terms of different metrics that we're trying to track, for example. So that's certainly one. We are in the process of actually changing our foundational infrastructure around sort of our order to cash. And we just recently launched a new ERP earlier this year. So that was also a very big accomplishment for us. And so in the coming 12 months, we're going to continue to actually look to upgrade a lot of those, kind of, again, I call them foundational infrastructures. And that's really to continue to help support the growth we're seeing and the change in how we offer our offerings to our customers. So that model has continued to evolve. It's much more consumption and usage based. So that is also really critical in terms of what we are delivering to our teams. We'll continue to help drive success in terms of AI adoption within the organization as well. I actually have responsibility for IT today, in addition to the accounting team. So our teams work very closely in both kind of making sure we're delivering the right efficiencies, but also what we're selecting and doing with AI internally. So those are some of the priorities that I would highlight.
Beth Gaspich, thank you for joining us on CFO Thought Leader.
Thank you, Jack. Thanks for having me. It was nice speaking with you.